So in this strategy, we are trying to find whenever there is a sudden move to do stop loss hunting. So we all know what stop loss hunting is. Basically, let's say if we take this example, I'm showing you TCS on a 30 minutes time frame, and you will notice that the stock was going up here, and suddenly there was this big red candle, and this acted more like a stop loss hunting, and then the stock kept going up. So in these kind of cases, we are trying to make profits by taking the perfect entry. So basically, whenever we get this kind of thing where the stock comes down very quickly, we can go for a reversal trade. That means we can go for a buying trade, but how will we know that? So for that, I'm using two indicators. The first indicator is the moving average. So the pink line that you see in the middle, that is the moving average. And what the criteria is that generally you will notice that the pink line and the stock, so the stock and the pink line will go very close. This is a 9-period moving average, and the blue lines are the Bollinger Bands. So we know that Bollinger Bands are the levels at which there are chances if the stock touches these levels, it can take a reversal, right? Because as per Bollinger Band, I've used a normal 2 standard deviation Bollinger Band. So let me show you the settings as well. So these are the settings for Bollinger Bands, the normal settings of 20 length and 2 standard deviation. And let me show you the settings of EMA as well. This is the normal SMA. You can use SMA or EMA, up to you. And this is a 9 moving average SMA. So as I said, we are using two indicators, and you will notice that most of the times the stock goes very close with the SMA. And one more thing to notice, that the difference, so when the stock is going up, the difference between the Bollinger Band and the EMA, this difference is less, and the other difference, the other side, the difference is more. So difference between the Bollinger Band and the moving average here is smaller compared to here. But whenever you see a sudden move, so I've marked this sudden move in the red candle. In this case, you can see that the Bollinger Band was touched here at the bottom, and also the difference between the movement, so the candle and the Bollinger Band is more than the upper Bollinger Band. In this case, there is high chance that there can be a good reversal, because this movement is kind of a fake movement or a stop loss candle, and we can go for a buying trade. So the first condition is we are looking for a candle if it touches the Bollinger Band, and at that point of time the difference of the Bollinger Band and the moving average is more than the upper difference. So that is the first condition. If that is true, we are looking for a buying trade, but we will only take the trade once we get a green candle. So we've got the green candle after that, so we will go for a buying trade here. This will be our buying entry, and we can put the stop loss here, which is the low of the red candle. This can be our stop loss, and we can do two targets. The first target can be the middle line, the moving average, and the second target can be your Bollinger Band on the upside, and we can see that we have made good profits here. Similarly, let me show you one more example here in TCS. Again, you will notice here, if you see here where I've marked the candle, same thing has happened. The stock was going up relatively easy, and suddenly there's a gap down. But if you see here, the first condition is met. The difference between the moving average and the Bollinger Band is much more than the upper difference. So this shows that there is some problem with the price. There is high chance that the stock will go up. And the second thing is, now we are looking for a green candle, and we can see that the green candle has come directly. So we can take a buying entry. This can be our buying entry with this as the stop loss. And again, we can have two targets. Either the first target can be the moving average, or the second target can be as soon as it touches the upper Bollinger Band, which is somewhere here. So those are the kind of trades that I usually take. This you can take either in stocks or in index also. And since this is a reversal trade, you will find that the stop loss is pretty small, but we can get very good targets. Now let me show you one more example on Nifty as well.
So please like and subscribe, and don't forget the comment sections, because I'm supporting you.